we need to take a look at the markets, and we also need to talk about non-farm payrolls coming up tomorrow. I am Dr. Stock, Doctor of Education, and did you guys hear about the Mission Impossible movie that they're no longer going with the single male lead on it? This time, they're going with a whole flock of male turkeys. They're saying it's going to be led by Tom Cruise. All right, I have a look at the cues that I think that you're going to find very interesting. Remember, it tracks the NASDAQ 100, and we'll also talk about non-farm payrolls. I'll tell you about Moomoo and your free stocks, where you can see my buys and sells and my other research that I put out there, and then also my options course that I'm building right now that you can also check out. In the meantime, I do want to get right into the economic events. So let's pop that up there and let's talk about what we've seen so far. So when we look at today, we have a Challenger job cuts coming in about half of what we had. And it turns out that when you go and look at the chart tracking the Challenger job cuts, yeah, it looks kind of low, but July was much lower. And if you take this and go out 25 years, you can see that right here that we are, actually maybe you can't see that, there we go. You can see that we're pretty much on trend right now, that we're slowly declining with those number of cuts. Now the Fed doesn't really like that very much. However, the market didn't really seem to care. We could go and look at that 7:30 hour, and I know yesterday in my video I said 8:30, I apologize about that. Initial jobless claims came out at 8:30. So at 7:30, when you look at the pre-market hours, the market didn't really care. It didn't blink over the fact that Challenger job cuts came in where they did. I think if it was something far north of these numbers that it broke that trend, that we would have seen a bigger movement there. Instead, let's go back from that and let's go to initial jobless claims still coming in the low 200,000s, which is good for the people who want their jobs and are employed. If we're looking for bullishness in the markets and we're looking for the Fed to lighten up a little bit and seriously, like, no more rate hikes, please. And right now it is looking that way. If we look at the CME Fed Watch tool, and I got to go back from here to November, right now we have about a 3/4 chance that there's no rate hike. Still no small chance that we do see that rate hike. So I still don't think that we get it. I still think that we're done. I think the Fed is saying what they need to say. But as far as their actions go, I think their actions are going to tell the story that they're good where they're at, and they better not push things much farther than they have. And I think bank earnings are going to be very telling there when we look at that. So for initial jobless claims, the markets did react to that. They were most definitely hoping for a higher number. And that's something that as soon as that came out, if you go back to the minute chart, you can see that drop. And we will take a peek at that when we look at the charts and some of the technical analysis that I have for you. So tomorrow, 8:30 a.m., non-farm payrolls, that's one that we want to see softer numbers for the number of jobs added. And then unemployment rate also comes out. I should also mention that. That one coming in at 3.94%. That is going to, well, we'll see, because it'd be a mixed bag on that. One, it could allow the Fed to finally see the softening of the labor market that they want. So in that way, it could be upward pressure on the market, but too much too fast. And it starts to say, hey, things are starting to go down a slippery slope. And we could be possibly heading into a lot of unemployment, which could possibly lead us into that recessionary scenario. So we want to be absolutely watching for that. And there's average hourly earnings participation rate. There we go. And government payrolls coming out, manufacturing. There's non-farm payrolls, private. Still all at 8:30. So tomorrow 8:30 is going to be a really big day when we watch that come out. Consumer credit change, used car prices, and then total vehicle sales, believe it or not, at 3 p.m. tomorrow could be a big catalyst for us if that number comes in super soft, because vehicles and discretionary spending, like when people start to tighten the belt, maybe they hold off on those car sales. So we want to be looking for that number and see if it comes in well south of 15 million. So we'll have to watch that and see what happens. All right, so I do want to bump out of there, and I want to go over to TradingView. And we're going to take a look at this. And so here we can see the cues and we can see the path that we've been on for this one. And if I put up some of the technicals that I was looking at on this one, so let me click that button to bring them back. So this diagonal line that you see right here, this is more of an averaging of what we've seen coming all the way since October. We've gone up and down around that and danced on it. We've narrowed down on it. We broke up above it. And now we're starting to see that downward movement below it a little bit. And when we look at the momentum indicator at the bottom of this, we're still in bearish territory, although we are creeping up towards 50. Should we get to 50 and cross it, that could be more bullish behavior. And the lines that I have on here, I will show you where they came from in just a moment. But coming in at about 364, 365 is where we see that line. And then up above there is where we have about 370. And you'll notice if you take an eagle-eyed peek right in between here, you can see the 50-day simple moving average also in there. So we have a fair amount of resistance to the top side. We are starting to have just a little bit of a bullish slant to this as we look at the most recent candles that we have that we're experiencing that recovery. And I said that this would be a game of retesting resistance and possibly getting rejected at those different resistance levels. I don't think that we're out of the woods yet on this one. So now, where did these lines come from? Well, I do want to show you something I talked about on my weekly chart, and I'll bring it back on here. And TradingView has a very colorful way of displaying this. So if we go from all the way down in the valley, all the way up to this peak, you can see where we've actually managed to come around and touch these different lines that we have. And when we broke that 50% retracement line that we have here in green, that's really where things started to take off, that we were actually really seriously on a bullish trend here. You can see how long it took to break it, and it took quite a while. It took us all the way from the end of March until we got all the way over to the beginning of May, first full week in May, and then we finally started to break strongly above that, and then we really took off. So that explains that part, and you can see how it coincides with this red line that we have right here. And if we go and grab another Fibonacci retracement here, click the top of that peak and come down to our most recent bottom that we have down here, you can see these lines lining up with that we have and how they line up with the candlesticks that we have on here. So the red line where we're starting to have trouble, and then also we could possibly soon peak up here all the way up to 365. We're not that far away from it, maybe 2% away. And if non-farm payrolls goes very positively for us, then we could see that movement to the upside on this. I still think that big bank earnings can be something that's in our way, and I think that we need to pay attention to that Friday the 13th is going to be a scary day in the markets. Now, mind you, it's pre-market hours when the banks report, so maybe that scary day actually comes up in anticipation of Friday the 13th, so that the triskaidekaphobes will say, people who have fear of the number 13, on October the 12th, maybe they're the ones, that's the day that we actually see that big dip in the markets. We hear the bank earnings and we decide either to go worse or better from there, depending on what they have to say about themselves, their performance, where they see the strength in banking sector, how's the strength of consumer, what's the economy looking like from here. They're going to tell us a whole lot, and it is no small thing. And then don't forget about big tech actually helping to prop up what we see in the Qs, and hearing from the Magnificent Seven is also going to be very important for us. And we don't hear about all of them right away. It's going to take several weeks before we actually do hear from them following the bank earnings that we get. So they'll be the next big catalyst following those big bank earnings. It's going to be absolutely crucial that we hear from them. And if they give us poor, lackluster results, that means that we experience a lot of softness, because that's done a lot to hold up the market, at least as far as the NASDAQ is concerned, although it also does considerably help the S&P. But from there, if they have wonderful earnings, then we can possibly see at least some levity, some upward pressure in the markets that can really help us out. It doesn't necessarily entirely help the macro trends that we see, but it is something that is most definitely worth considering. So I did tell you that I would tell you about how to get those free stocks from Moomoo. I'll pop that up real quick. It's 16 free stocks. The offer does expire on October the 11th, and we're closing in on that date. It's less than a week from today. Here's the deposit levels. Here's the free stocks that go along with them. Note that free share of Tesla or Google that goes along with it. Tesla, by the way, big news today coming out that Kia is also joining the partnership to join the supercharging network. So more favoritism towards Tesla, that means more for the top lines and their bottom lines as more people buy into their standard as the charging standard for the US. So just wanted to toss that out there. And then my buys and sells, here we go. By the way, that news tip coming from Kiko over at my Discord, which is available through my Patreon, where you can see my buys and sells, get access to my community. And let me tell you just real quick about that community. I've never been in such a great community, and I don't know that I'm the one that makes that community. I can tell you that the people who are in it are really making that community. They are kind, they are passionate, they are helpful, they are inquisitive, and like all of us, absolutely 100% moving forward financially as best we can. And it's been pretty good so far, and we'd love to have you over there. And then something else that's very much enjoyed over there is the options course that I'm building out, that it starts from the very beginner. So if you're curious about options and how to use them to amplify your portfolio, you can go and look and see what options are all about and see really what it means in order to buy an option and sell an option, you name it, the different considerations for time value, volatility, all of that. And then we're moving into applications in the next phase of that course. And I'm very excited to bring that live to all of you. So thank you guys for watching this video. Keep an eye on what we have coming up for the Qs that we could possibly still push higher from here if we break out of the top of the little tiny bullish channel that we have. We have 364 to 365, and then from there moving up to like 369, 370, maybe 372 that we peekaboo up through the top a little bit from there. And we're just going to have to track that, watch the big bank earnings, that come out October the 13th. Watch for non-farm payrolls as it comes out. 8:30 tomorrow is a big time. So if we close lower today in anticipation of that, well, then we do. And then next Thursday, also very critical for us, not only for initial jobless claims and the other economic events that we have, but then also because it's the last day to trade leading up to the big bank earnings. And I think that's going to be a big day in the markets. All right, guys, I got to wrap this up. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.